Welcome to the Value Builder Podcast, where we focus on real estate with a value-add mindset. Real strategies, real operators, real outcomes. Let's dive in.
Today's guest is Will Curtis. He is a veteran CCIM member, sold over $1.2 billion in commercial real estate transactions. Also, Will is an Army veteran. He knows how to deassemble and assemble helicopters. So I'm going to lean into that. And he's in San Antonio, sells a lot of commercial real estate. I'm sure he's seen quite a lot through his career. And I'm very excited to interview him today. So welcome to the show, Will. And if you can briefly introduce to our audience about your career, what your market, what your asset class, so we can get the flavor of what exactly you do. And I'm excited to dive in.
Yeah, well, Saul, thank you so much for having me on the show and willing to listen to me at least ramble about what I do. I kind of came a little bit different into real estate. I spent, as you mentioned, almost 6.5 or so years in the Army. And honestly, we had a command financial specialist who's generally the guy that teaches you not to go buy for 36% interest from the dealership and how to balance a checkbook. He sat down and did a kind of rich dad, poor dad style class on real estate investing. And here he was at E6, towards the end of his career, 20 something years. And he was talking about he was making more money in his real estate investments than he was as, a career soldier. I'm sitting here as a young private making like $1,400 a month going like, the guy's not super smart. Like he's a normal guy. I should do that. That's where I should go. That's really like kind of got me started in real estate. So as my contract was starting to come to an end, they changed the GI Bill. I figured if I go and get a college degree in real estate, I can then go commission back in the military, live like a, enlisted guy and invest everything. And I'd be a millionaire by the time I got out of the military. At that point, I got my eyes opened in university to what commercial real estate was and what a lot more happened to be, and started off getting hired at a family-run company in property management and realized I kind of liked the field. I liked not getting shot at. I liked making money, and decided to go ahead and stick it out and give a civilian career a chance. And if it worse, I had the degree, I could always go back in the service. So it's kind of how I transitioned in. So I worked for a small family-run company for a few years, transitioned over to a Fortune 500 REIT, which is where the large bulk of my transactions went. I ended up managing acquisitions and dispositions for North America while I was there. So ton of travel, about 90% of the time traveling. You don't know where you are most days type stuff. And then family started changing. Kids were coming into the picture. And my wife said, hey, I don't want to be a single mom. Why don't you find a job back here in San Antonio? And I did. I found a shut down military base that was going through redevelopment, which was such a serendipitous point. Coming in, me transitioning out of the military, working on that, now taking a military base and transitioning out, and so many skills that kind of transitioned over. And from there, I moved back into brokerage after a handful of years, and now full-time in the brokerage and then property and asset management.
So let's go back to those days when you read Rich Dad, Poor Dad. So after you reading this, did you get in housing or you went straight in commercial real estate?
So I honestly, I joked that the whole idea was either sell houses or flip houses. I didn't know what exactly I was going to do. Ultimately, I never got into residential whatsoever. That was kind of the plan. That's everything I studied through the Army. And then when I got into my undergrad, realized that commercial was a thing. I had no idea. As a 19, 20-year-old soldier, I had no idea. I didn't realize people bought and sold office buildings or retail centers. That just never registered to me. Yeah.
Wow. So, very, very interesting story. So it begs the question, serving military and selling commercial real estate, what did you learn in Army that you think really, helps you, or what skills and tools you're able to use in your civilian world and selling real estate?
Yeah. So that's, I have a podcast myself called the Vets in Real Estate Podcast, where we help take veterans transitioning out of the military into careers in real estate. That's the exact question we ask every single time. What did you learn from the military that has helped? For me, I think it was the analytical skills. Working on a helicopter, there's little to no room for failure, right? If you mess up, helicopters crash, people die. Obviously, real estate's not that life or death, But coming in with that mindset absolutely has helped. I'll say the discipline coming in, you work till admission's done in the military. And I kind of carried that same thing over into my real estate career as well, is that you got to get things done. You've got to work on making sure that the client's being taken care of. And the one thing that I think has helped, and this is the one thing we've learned through the podcast as well, is that many veterans, as they transition out, they're lost for a lot of years. They can't figure out what to do. Nothing feels like they have meaning because you're a part of this huge, big machine with a brotherhood and a sisterhood that's just, it's different to describe anywhere else until you figure out how you're serving somebody else. That's what we've noticed, at least through our interviews, is that once you figure out how do you serve somebody or how you're serving something else, then your business takes off. And we've seen it time after time with interviews. And I can even say for myself, once I finally figured out how I was going to serve people, what my why really was, that's when my business really set down and took off. And we've seen that over and over and over again from many military veterans through the interviews we've done. Once they figured out who they were serving, that business just took
interesting
off.
perspective. Yeah, because when you think about commercial real estate, right, or real estate in general, or Kiyosaki cash flow or Poor Dad, right, I think people jump in real estate a lot of time for the reasons as freedom, financial freedom, money, right? But these things, freedom, financial freedom, money, is actually a byproduct of what you do. If you're able to find why or serve, like it's a very good analogy coming guys from army, right? They serve, they had a purpose. I think that thing will come naturally. If you put the freedom in front of it, it's just probably hard to achieve it, right?
I think so. I think you get glamorized, especially coming out of the military. Wait, I don't have to wake up at 5:30 in the morning to go work out. I can do what I want. Like that freedom is palpable. Like you want it. The joke is it's like you're getting out of being incarcerated. Like you want that freedom. But once you figure out you can serve and you continue to serve, absolutely that byproduct becomes so much easier to obtain.
Yeah. So serve, can you lean into that, either your experience or folks that you talking who transition from army serve, is that serving the community? Is that serving a project to get, or serving the client? What would be that analogy?
So I think for each veteran, it's a little unique, and I can at least speak for me. What I've noticed in serving for me was really twofold. One, it was helping others transition, helping others find success. So if that's other agents that are trying to transition and to build their business, if it's veterans that are trying to move in, like that was part of that service, was how do you make people successful? So that's part of the reason why I do as much teaching as I do with CCIM and IREM and at the university that I teach at. It's all about helping people be successful as part of that serving. The other side is, I think in real estate, we've got such a unique opportunity to really change our community. And by doing our job well, by doing our job great, we put small businesses into locations to where they can find and be successful. We find investors who now can grow their portfolio and create wealth that they may not have ever had or could have. And so even on the economic development side, I can remember when I was working at the Port of San Antonio, that former military base, we had a McDonald's not far from there, usually on a quick lunch break. I had a half hour, so I'd run to McDonald's, grab something real quick, come back and run to the next meeting. And I got to know one of the gentlemen in the back that was a cook, got to know him pretty well. And, he was excited. He's like, man, I just had a kid. This is great. Hey, congratulations, man. That's awesome. And then he kind of hit me. He's like, yeah, I got to find another job because McDonald's isn't paying me enough to support his girlfriend and his child. And I was like, man, so what do you want to do? He's like, I've always wanted to do stuff with computers, man, but I don't have the money. I can't do all that stuff. Well, we just put a tenant in down the street that's doing a training program to get people through here, and just a conversation there, me bringing in the right business, knowing the right guy, put him there. About a month or 6 weeks later, I was walking through the building and saw him sitting in one of the classrooms. And I was like, oh man, that's all due for McDonald's. I don't know his name. We never do names, but that was there. And knowing he went from $12 an hour to $40 an hour, I mean, that's life-changing for him. You tripled my income. That's life-changing for me. We did our job right. And somebody else had a life-changing experience. His kid will not know the same struggles that he did. His girlfriend will not know the same struggles they did growing up. That's the power of real estate. That's when we do our job great. When we do our job well, that's the impacts we can have. And that's that service, at least for me. Once I figured that out and I saw we had that impact, man, we started growing.
What we're talking, I have in my mind kind of that commercial real estate is almost we're like master matchmaking. We're matchmaking tenants with businesses, and we're matchmaking tenants with landlords, capital with buyers, sellers with buyers, banks, and everyone else. And then when you're able to make that the perfect match, everything works. Everything works for everyone, right? It's so awesome. All right, let's dive in CCIM. For some folks who may not know what is CCIM, we have them in our show, not only brokers, but also investors. Can you maybe briefly describe what is that and why it's so useful? And I believe that's probably probably the best course for commercial real estate who wants to learn, but please.
Yeah, I think a lot of CCIMs will kind of describe it
Mhm.
as the PhD of commercial real estate. And I mean, there's some fairness to that. What I think CCIM does a very good job of is really on the education side. So if you were looking at building, you want to understand the math, the demographics, all that. The designation itself goes into really 5 classes. One is the commercial real estate finance. How does finance actually work? There's the course that I teach, which is the market analysis. It's diving into understanding demographics, understanding the economic base analysis, understanding really how a market works and where the numbers we come up with these assumptions, where they come up with, and what businesses are going to impact what, how, and in which way, and understanding the market side of things. There's the user decision analysis. So that's more of a tenant or buyer rep type decision. And then there's the investment analysis, which is the final course. And then we also have a negotiations course, which is typically done with the third course, a full day of just kind of negotiations training. So with that education, the goal is you come in and really when CCI was founded, what you had real estate that spoke their language. You had corporate finance that spoke their language. So when CCI was first founded, they said, we need to get both parties to talk together. And that's really what CCIM at education was founded on, was making sure that everybody spoke the same exact language. So by going through that, you learn to speak that language, you learn the math, you learn how to be able to communicate in both corporate finance worlds and real estate worlds, which now is much more blended, but at the time wasn't. And then from there, there's a portfolio requirement to earn the designation as well. There's a few different ways to do it. So ideally, those who have a CCIM have done the education, they're smart enough to do it, but they've also got a track record of actually doing the information. That's just the education. What I'll say that goes even further is somebody described it to me at once as like the CCIM Institute's like a fraternity. And I didn't like it at first, right? I was like, I don't know. I was in a fraternity in college too. Like, I don't know if it's the same thing. And he's like, no, think about it. He goes, the more you put into it, the more you get out of it. It's a group of people that all generally want to see you successful. They want to grow. And I say the more and more I've gotten involved in the Institute, where I've got friends across the country that if I get stuck on something, I give them a call. They walk me through it. I had one where it was a developer was talking about drilling a well like 6,000 feet. And I was like, is that even realistic? So I called a couple developer buddies I had and I was like, hey, is this real? He's like, I mean, it can be done, but I mean, most people drilling that deep are drilling for oil, right? We're not drilling that far for water. Maybe a little far-fetched. Okay, good to know. Not my wheelhouse. They had nothing to gain. And then, I'm not talking to somebody who's a direct competitor to the market who's going to go, Will really didn't have a clue what you're talking about. It was such a great network of people to reach out to and grow and see how you can be successful and help them be successful.
Yeah, and I want to
well.
mention also on that it's not only for brokers. People maybe see designations. They think that maybe that's only for real estate licensed folks. Full disclosure, I didn't finish all course. I have 101, 102 and got busy and at some point maybe, but it's a really great course. And that's also for operators, bankers, title agents, whoever is associated, buyers and sellers, landlords. So it doesn't have to be only for your brokerage, so to speak, so that's really a great course for sure.
Yeah, I mean, a lot of appraisers will have it, property managers will have it. I mean, you see a lot of it. One of my favorite instructors in the Institute, he started off in really single family investments and doing affordable housing and single family investments. He's got his broker's license, but just as much so he could do the random deal for some friends. But the bulk of his portfolio was simply his investments.
Yeah, for sure. That's great. Awesome. Thanks for that plug in. Let's talk about your transactions over $1 billion in transaction. That's a lot. Talk me through this. Do you have a team or sole agent? In how many years it took to get those transactions? What asset class? It's really, quite an achievement, I believe, $1 billion in transactions.
I appreciate it. I've been mostly a medical
Mhm.
office guy through most of my career, really focusing on that side of the asset. And I started off in corporate real estate, as we kind of mentioned at the beginning of the show. So a good chunk of those were working for the corporate folks, going through and doing hospital deals, going through and building and developing the medical office buildings across the U.S. As I transitioned more into the full-time brokerage role, I run a shop, Browning Commercial, here in San Antonio. So I run that there. And then we have 18, 19 or so agents through there. Of course, that's not in that production value. And then I have a team myself, the Sabers Commercial Advisory Group. And right now it is just my admin, myself. And then we have one agent, Eric, who's out there killing it. And then we're building the property management, asset management side on the back end, which I think is one of the things a lot of folks are kind of missing in the equation, is that you can go out there and sell a deal, but are you really helping the investor through the whole thing? Coming in with the asset management and that side. So generally, mostly medical office. We've kind of shifted a little bit to being more specialized office. When I was at the Redevelopment Authority, we did a lot of cybersecurity work. So very, security conscious office buildings. So now I think most of the brokerage is really in office, industrial, and kind of land development, which is kind of what I've found myself in one of those three buckets throughout my career. And we find ourselves doing some of the same kind of transactions on a regular basis. My team member who works on my stuff typically does a little bit more retail. So at that point, we've got a good founding. I'm just going to find a multifamily specialist to come in. We can handle all gamuts of real estate.
And you're in San Antonio, guys, right?
Yeah, we're in San Antonio, and a good chunk of our business with the office stuff is nationwide. So we were doing stuff in Boise. We were looking at stuff in Omaha. When you're working for a national REIT, that's where your relationships come from, is nationally. So we still pick up a good bit of business kind of throughout the U.S. But home base is San Antonio, and I travel too much. I don't know how much more I want to travel to do more transactions.
Yeah. I need to talk to your team. We actually have a deal on a contract that's a broken deal, buying from the bank, small bay industrial. So maybe we can talk about it offline with your team. But that's great. Now I want to chat a little bit about the office. You said medical office. Are you doing any work in the regular office, or you strictly medical office as well, right?
No, we do some general office work as well.
Right,
Yeah,
so
absolutely.
your crystal ball, medical office. I know we're looking for that bottom, at least in Chicago. Probably it's gonna be year two. It seems like every month we're at the bottom, but we're not. Where do you think office stands in the nation, in Texas, San Antonio? Maybe you can give us any flavor. What's your opinion on office? Are we really rebounding?
Yeah.
We still need to scrape those vacant buildings, or where we're at?
Maybe it's hope, or I think I was at C5 last week talking about it with maybe Stockholm syndrome, that we're finally getting good news, so we're all clinging to it in the office market. But I think one of the things that we're starting to see is positive trends, that we're starting to see people come back to the office, which that's the big struggle is employees not wanting to come back to the office, which is hurt office vacancy. And I get it. There's days that I want to work from home too. I completely understand it. One of the things that I tracked and kind of have looked at is there is a stat called the labor leverage ratio. And what that does is it compares the hirings compared to the quitting and firing. And it builds a ratio, basically one being even, and then above one means that employees have more power in the market, and below one means that employers have more negotiating power in the market. And what we've seen with this is that especially...
So that's you track how many are being fired and how many are being hired?
It's a comparison to basically who's got the more leverage in the negotiation. The idea is that if employees are quitting, the employees have more power in the market, whereas if they're being fired,
so it's a little different data than just an employment data.
Market.
How many we have? What's unemployment? It's just pretty much
Correct.
The pace, kind of the pace of the firing and hiring.
It's kind of like a buyer's and seller's market, right? We're looking at the same kind of thing. Is it an employee or employer's market? What we saw when COVID first happened is we saw the employee market just skyrocket, where you could go do whatever you wanted. Stanford actually put out a study about 2023, I think is when that study came out, where they put numbers somewhere about 65 to 70% of employers did absolutely nothing to employees who didn't come back to the office, even though there's mandated. There was nothing. They weren't fired. They weren't reprimanded. They just kind of whatever. that is now, that's kind of the peak of when we were in the employee market. What we've now seen is that while we're still slightly in an employee market, we're about the same level that we were about 6 to 9 months after COVID happened. So we're definitely coming back. And what you've kind of noticed through maybe just general office trends is that occupancy is starting to kind of follow that a little bit. Now, we haven't looked at this historically because work from home really wasn't a thing prior to 2020. And some of this is still, there's no causation or correlation. I mean, there's no causation. We're using just correlation. But what we are seeing is that as that labor leverage ratio is coming down, we're also seeing occupancy in buildings go up. I think it's a fair look. So as we're seeing that nationally, we're starting to see things start to come around for office. We're still not out of the woods. I think we still have some struggles, but we're getting back to what would be more of a normalized market. Prior to COVID, it was just on the employer side. So we're relatively getting close to what that was again, and we'll see where that ultimately goes. So I think overall, I think office is coming back, not going to be nearly as strong. It's not going to be a boom like we've seen in retail since post-COVID, but it's starting to come back where demand is starting to be there. And even teaching at a university, have sophomores, juniors, and seniors in my classes, they want to go to the office. They want to graduate. They want to go to the office. They want to be around peers so they can learn, they can grow, they can be educated, and what they need to know to do their job. So I think we're seeing a bit of a shift, especially with this new graduating class. Mind you, they spent most of high school locked up for COVID. Like they want the interaction. So I think that's where we're going to start seeing that come through, at least nationally. If you start looking at Texas was a little weird because COVID didn't really happen in Texas. I don't mean that to be, dismissive of those that lost their life, but we didn't react the same way as much of the country did. That we didn't necessarily go as far or extreme where we shut down. We really kept business open. So for us, especially San Antonio, we were back to pre-pandemic numbers, 23. If I remember the numbers right, our occupancy was back. We sit right around 10 to 11% vacancy, which is generally where we've sat for the last 25 years or so.
So vacancy only 10, 15%.
10 to 11,
Wow,
I think, for San Antonio.
Really low compared to the other parts of the country.
I mean, in comparison, 25 to 35 is where the national average is looked at. Our high was mid 20s through all that. And then you look at Austin, who's just an hour and a half north of us, their numbers are a little bit higher. Dallas and Houston, their numbers are a little bit higher as well. I'll say one of the things that San Antonio is blessed with is so much of our economy is built on in-office work. Cybersecurity, one of our largest drivers, has to be done in the office. Biomedical research and engineering, you can't test anthrax at your kitchen counter, right? You got to be in an office, you got to be in a building to do that. So we've seen those people come in, even with financial service, with FINRA making their changes. We've seen a lot of financial services start to come back as well. So those are three of kind of the five big drivers that San Antonio has for economy, which are all required to be in office. The thing that I think is interesting for San Antonio compared to other markets is that everybody else in the nation is saying we got to be these floor plates smaller. No more do we need the 10, 20, 30,000 square foot. We've got to be down to 6 to 10,000 square feet. Well, San Antonio historically has been about 6,500 square feet for a space. So we're already where the market needed to be. So I think we're in a good position. Now, I'll say the downside, we don't have the explosive growth, but we don't have the explosive decline either. It's slow and steady. And even when we're working with a REIT, we would go out there and buy something super risky in California, and then we go buy something in San Antonio to offset the risk. Like that was literally the strategy. Something's risky, let's go buy something in Texas, generally around San Antonio. So, take it as what you want, Our office market is doing better than most. Are we going to get explosive growth like other markets? Probably not, but we're definitely not going to have the explosive decline like other markets typically have as well. So it's good long-term,
So let's say
safe
office
growth.
market right now in San Antonio, and these numbers, call it stable Class B office building. What is the cap rate, general cap rate? What's the cap in San Antonio?
For a stable
office.
kind of Class B, we're seeing kind of mid sevens or so, and we don't have a lot of movement in the Class B space. We're seeing more movement in Class A and Class C, and not so much in Class B. So I think everybody's seeing the same thing with Class A, flight to quality. Everybody wants something nice. They're doing everything to be nice. If I'm going to downsize my square footage, but I still want to bring in my employees, they want something nice. They want to be in something that's nice and feels like it's worth coming in. So I think you have that side, which is given drive to why we want to have more space, and we're seeing more Class A type transactions. I think on the flip side is you have individuals who are like, my employees aren't coming to the office anyways, I'll just give them an office so they have someplace to go. So we're seeing more Class C on that side, where they want to jump in on Class C property because it's the cheapest alternative to giving them space. So we're seeing a kind of a tale of two cities for two different reasons. Not nearly as much of the Class C is trading. It's definitely kind of having the same struggles there. But to me, it's a noticeable difference between B and C, that C seems to be outperforming B, because B's in this kind of middle.
Don't want to be there.
Don't want to get B space because it's not nice enough, but I also don't want B space because it's not cheap enough. And it's a weird place to be.
Coming from industrial world, I remember the transition was actually Class C is getting hammered because everything is kind of moving up a little bit higher, for the lesser price.
Right.
And here's going direction the other way. Wow, interesting. Okay, great. Well, I'm definitely learning a lot here, and I'm sure my audience learns a lot here. So, follow-up questions on the offices. Medical offices, I consider it's completely different animal, most like from offices.
It is.
So tell us about medical offices. First of all, why do you think it was not affected during the COVID, even completely in completely different ways than regular offices? And what's the state of the medical office right now? Is it still as hot? Is it still growing like it was, or it's slowing down? I'm talking, let's say, I'm comparing just regular office and medical office.
Sure. Well, I would challenge it was going strong through COVID, because we had a period of time where we didn't know what was going on with medical office because it came down to staffing. For a while, we had a nursing shortage. So what ended up happening is, if you weren't in a main medical hub, those satellite offices, the ones on the south side of town, or little satellite offices kind of in the suburb of the major town, they didn't have enough nursing to staff it, because you could go do a travel nurse, make 3 times as much money. And we actually had a bit of time where if you were in a tertiary or in a sub-market that wasn't the main medical driver, those buildings were sitting vacant because they didn't have enough staff to actually take care of them. So we had a bit of that going on through the early stages of COVID. As we've seen kind of COVID restrictions go down, less travel nursing is still there, but less travel nursing that's there. And then a lot of economic development folks started pushing people into nursing as well. So we saw that start to come back, where that hasn't been nearly the same trend that we had saw early on. Now, as we've seen it, really, I think medical office has been its own entity. It's been its own product type altogether, kind of going differently from office. What I think has been interesting with it is that because of multifamily's demise, because of, industrial being as hot as it was forever, people couldn't get into industrial. They started leaving industrial and coming into multifamily and coming into medical office. So we started having a lot of investors that were coming in. I've never bought a medical office building. What do I need to know? What do you mean the cams are, $8, $10, $15? I'm an industrial guy where I'm used to seeing $3 to $5 for cams, right? So the sticker shock sometimes a little bit differently. And I think that's one of the things that's been interesting with medical office. We now have so many non-traditional medical office investors that have moved in that I would almost argue that there's too much capital looking at medical office to where, I mean, if I was investing right now, I mean, I hate to say it because that's how I make my living, but I don't know if I would invest in medical office right now, because I think we're probably at the upper end of what the market would look like because so much capital has come in.
Can you speak to industrial folks coming into medical office? No, my most portfolio is in industrial. When did you see that, and can you talk about it? Why is that? Maybe in terms of cap rates, and what was the reason when you see the people are starting flying in to that asset class?
Well, I think as we look through COVID, right, we saw industrial industrial was doing well across the nation, but like it went really, really well for a handful of years, where I know there was a lot of my office colleagues who said, I'm going to start doing more industrial. I dropped my office business, start doing more industrial, because the transaction volume was so quick, so high that everybody was investing. And I think what happened is we got to the top of the market. We've come down a little bit, but we got to the top of the market where investors weren't necessarily willing to shift. So this is probably between 2022 to 2024. We started seeing this shift of a lot of folks that were in the industrial side realize they're getting priced out, or they're maybe a little more conservative and didn't want to necessarily make those big investments for something that was a third of the price, a year, 18 months ago. So we've seen a lot of those start to look for other asset classes, and we dealt with a lot of investors that were coming from industrial and even multifamily and saying, where else should I be putting my capital? What else can we look at? Well, at that same time, medical office was on the upswing, and they're looking for, where can I have my money safe long term? Medical office, short, a handful of issues, generally stays relatively steady and stays relatively strong. Healthcare is usually something, especially if it's a medical office building backed by a hospital. They generally stay relatively strong and steady because there's always demand. There's always people that are sick. There's always people that need medical care. There are certain procedures, if you start looking at cosmetic and more those type of procedures, that do step back. The core medical, your pediatrician, your allergist, the core people that we go see, those are always going to be in demand. It's kind of the analogy is the liquor store. You got a reason to drink when the economy is good, and you got a reason to drink when the economy is bad. Well, if the economy is good or bad, you've got a reason to go to the doctor. So we saw a lot of those in both multifamily and industrial investors looking at, where can I put my money that's going to help me long term and give me value long term. And medical office was one of those. I think we've seen a lot of that switch to retail now, with retail finally coming on board, and less than 3% vacancy nationwide, which is just a stupidly crazy number to look at. But I think we've seen a lot of folks that have now shifted.
Makes sense.
That way.
Yeah, so that's another follow-up question. Since you're touching all the asset classes, and in the context, primarily I was in industrial. We exited from self-storages. I think we rode a really nice wave, and of course we got hammered 2023, 2024. And we're still predominantly focusing on industrial, but obviously that is always very interesting to see what's that next asset class maybe is underserved, or that's about to get more demand or capital. Do you see anything right now that's maybe on the cusp that needs more people to come in and revive that asset class?
If I had all the money in the world and I was investing, I think I'd be looking at really two assets right now. I'd be looking at general office space. I think we're seeing starting to come back. I think what worries a lot of folks is, how long does that comeback happen? So do you have enough money to sustain that property while you're there? But we've been working with a lot of nonprofits who are looking at growing their space. They're looking at going out there and finding 20% occupied buildings, occupying another 20-25%, renting everything else. It is still the same budget of what they would want to look at. So I think, to me, if you have a staying power, if you're an owner operator, a nonprofit, this would be your time to jump into the general office, because you don't need the investment income. You're looking at it as an owner user with the upside of the additional rents coming in. So I think that right now, smart investors are looking at buying office when nobody's putting capital into it, and knowing the wave is going to come back over time. I think that's going to be one. The other one I love, and I don't know if we've got a true name for it. I keep calling them the man cave garages. I've heard them called the flex garages, the toy garages, but these kind of condoized, or even just leasing them. Basically, a garage, you could park your boats, your cars, you could put a small business in there. They truly are a flex warehouse product, but they are much smaller, and they are not necessarily always commercial. I love these products because there is demand, especially if you put it in a little of a nicer neighborhood. We've got a couple of we've looked at where guys got probably $400,000 worth of vehicles inside there, that his wife was mad. He's like, you can't keep parking them here. You need to go get another garage. Okay, fair enough. Next door to him is a guy who's been doing a manufacturing company out of his garage for years. Where he finally grew big enough where he can't do the garage. Another guy's got a boat, and he does painting for boats inside there. So I mean, there's so many small entrepreneurial uses, as well as the high net worth individual who's just looking for a place to put their toys. What a perfect opportunity. I've even seen a couple twists where they're actually making them residential.
Really?
Where they've actually put a small apartment in there, and it's basically, think of the barndominiums, right, where you've got 10,000 square feet of shop space, and you've got 1,000 square feet that you live in. It's the same idea, as where they're actually being zoned as residential with just a massive garage. It's what a typical guy would design for his house, right? Let me sleep, and then let me have a place for all my toys. So we're even seeing that, and Interestingly, they're getting away with it with zoning because it's residential, just not a traditional residential product where one bedroom efficiency type thing. And then, you're running your business, you're running, your toys or whatever you've got out of it. I love that product. I think that's going to be up and coming. I think that could get oversaturated very quickly because I don't think there's going to be nearly enough demand for it. But I mean, if we keep looking at them ourselves, where I'm trying to talk the wife into, do we expand the house or we to go buy one of these man
That's
cave
awesome.
garage
Yeah, and
type
I
products?
think a lot of people officials and planners needs to hear that outside of Texas when telling me like that's probably can happen in Texas. No, in a million years, no, and it's not gonna be allowed in Chicago. Until for 4 or 5 states will not gonna do this in industrial with a residential. It's a very interesting concept. No, for sure. If it works, definitely. That's great. Yeah, that's a lot of wisdom that you sharing with my audience. Still want to follow up question on the office side, so general office, and we don't have anything in our portfolio in general office. Actually, on the contrary, during the COVID days, we bought a few one, let's say one office park in Ohio where we demoed half of the buildings inside and we converted them to flex spaces just because there was not enough demand, right? So we did the other way around. um and I want to ask you like an expert. Usually when we buy properties, I try to think of in rule of thumbs, right? Okay, so I'm gonna buy this property, we're gonna put X amount of capex, $30-$40 into this property, we'll release it, and let's look how it looks in 10 years. So when I in the office, let's say in Chicago market, when I look in office, I put a tenant in office. If it's larger office, a lot of times build out in TIs. It could be $100. You barely do
Mhm.
light light spruce enough for $30 a foot. And if you're getting 10-year lease, it's another $20. It's the most expensive commissions for the office right now in Chicago. That's another $20 for both for 10 years on the commission side. And my tenant moves out, and I have another $20 commission and another $30 minimum. And it's like, how do I pencil this out? So in my
Mhm.
mind, until there is no kind of system where we don't destroy these offices on the lease up, that's what kills in my mind all the math. And plus, it's so hard to lend right now, especially in TIs. So that's other obstacles. Hopefully, that lending will come back on the TIs. But I guess probably the question would be, how do we really pencil in the viability of long-term general office when we have such a massive TIs predominantly and such a big commissions, after 5 years? You being an expert, what would you recommend to operators, to think long-term into this type of structures? Because let's say in industrial, my retenanting is probably 5 to 6% commission and maybe $2-3 a foot, and the industrial space is ready again.
Yeah. I think I have to wear two different hats, the broker hat or the investor hat. I've got to look
Hmm.
at where demand's coming, and not every market is going to see a return of demand. And I think some of our bigger cities, the ones that traditionally struggled through
Hmm.
COVID because of work from home and those things, I think are going to be the markets that are going to be the
Hmm.
longer ones that come back. So I think you look at LA, a Chicago, a New York, a Miami, I think those are going to be the markets that likely struggle a little bit more to come back because work from home is definitely there. And be honest, many businesses are okay with working from home. If you look at Austin, very tech oriented,
Hmm.
you have to work from home. San
Hmm.
Francisco, same thing. Again, big tech office, you have to work from home. So for me, in those markets, I wouldn't be on my radar of where I'd be looking to invest because, again, the culture of the employee would tell me the market's
Hmm.
not going to change
Hmm.
anytime soon. Now, if there's new entrants coming to the market, there's new industries coming to the market, maybe that's a little bit different. And that's where putting the economic developer hat on. For me as an economic developer, if I'm going back and looking at those, if I was in San Francisco or Chicago or elsewhere, knowing that employees aren't coming back, I'm going to start looking at how do I attract the businesses that have to be in office? How do I bring in cybersecurity? How do I bring in financial services or medical research or those things? How do I find those in office, have to be in office, and then start getting really, really creative on bringing them in? And sometimes it can be tax abatement. Maybe it's, different incentives or grants or bonuses. And I think that's where on that side, the economic developers are going to have to get creative, and we're seeing them get creative. Whereas from the owners, you were looking at some stuff in a very traditional office market, and the asset manager's like, look, man, I will, for a 5-year lease, I will do a year to 18 months worth of free rent to get somebody in the building. And I mean, that's desperate, but I get it. I understand it. So I think if, as an owner in one of those markets, if you can't sell it, you've got to figure out what you can do to get bodies in the building and at least cover your operating expenses so that you're not losing the building. Because we've seen a lot of that too, is that because you can't get occupancy up, we're starting to see foreclosures right in, or the banks in special servicing agreements with them because they simply just can't get the occupancy up. And rather than making rent, at least get your bills paid. So, I mean, I think looking at it there's some markets that are just not going to come back, and it's going to be a matter of time till the market comes back. Where we've seen the markets that do well are, again, the ones that have in-person office or the suburbs. So if you look at Chicago proper has struggled. You get out to Naperville, office market's a little bit better. Still not great, but you get to Naperville, the market's a little bit better. Why? Because people living in Naperville are still going to the office. They're not making the commute into Chicago. So, those suburbs are doing a little bit better. And we see it even in San Antonio. Some of our suburban office product are still doing a whole lot better than what we see kind of core San Antonio, proper, simply because that's where people live. That's where they move to. They don't want to make the commute. And that's what a lot of businesses decided to say, hey, look, if I'm going to attract my folks back to the office, let's go do an office that's close to it. We saw a big run up of when banks were shutting your branches down. Office users are coming in and buying those banks and converting them into office uses. So I thought, how in the world are you going to repurpose all these banks? And before I could even figure out a strategy, businesses were coming in to the tertiary side and picking them up and making it a satellite office for a Boeing or for a KPMG or whatever the case is. So the employees didn't have to drive downtown. They could stay close.
So those offices, they being bought as a spec, or normally they bought as a box and then marketed as an office and then build out later?
So it's been mostly owner users on the bank side. It's been owner users coming in, seeing, operating, and buying it, or sometimes leasing, in those situations back from the bank. But yeah, it was all about, let's find the locations that'll work. And generally our suburban markets have done slightly better, which is a little inverse to what we've seen historically.
That's amazing. Well, that was a lot of wisdom. Thanks for sharing. I definitely learned a lot. I want to leave you with a few rapid questions, and before we wrap up, I want to ask you also where the audience can find you. But last few questions. Best business advice you have ever received for our audience, if you can share. What best business advice you have ever received?
Man, I've received a ton. Some I listen to better than others. I would have to go back to some of the advice my dad gave me when I was going to the military, and I turned around and took that same advice and moved in. And one of the things that he said, it said a few things, but the two that really stuck was, he said, one of the things to do when you go in the military is find what the old guys did and made them successful and go do the same thing. So for me, when I came into the civilian side, in the military, they went to recruiting school. They had these assignments. So I looked at the same thing. Who were the guys that were 20, 30 years ahead of me in real estate? Most of them had their CCIM. Most of them were investing in their own product or their own, investing in real estate. Most of them had gone through or had some type of college education. Like, these were the things I was noticing. So I went and I mimicked a lot of those things as well. The other thing he told me that would make the best time of my time in the military was get yourself involved in the culture. So the military, very different. So I was in a cavalry unit. I wasn't a boots and a cowboy kind of hat kind of guy. In the cavalry unit, you wear spurs, you wear hats. Like, it's a whole thing. I embraced it, and I went with it. And to me now, some of those things I cherish from my military time is my Stetson and spurs. But I went through everything that was culture. Coming into real estate, it was the same thing. What do people do? Where do they go? What conferences do they do? How do they get involved? And finding where they get involved. So now culturally, I'm ingrained in the culture of our commercial real estate community. And I think those were two of the best pieces of advice I got, was go figure out what the old guys have done and be successful, and be a part of the culture. Don't be on the outside. go and
That's awesome.
enjoy the
All right,
culture.
one more. What biggest trend you're watching for 2026 and we should watch it? Biggest trend in you're watching 26. It could be commercial real estate, could be something else, but anything you are watching for to come up in 2026.
Man, something for 2026. I think the biggest thing, again, I'm going to be a little more specific on office, is looking at what work from home trends continue to do. I think that's going to be interesting to see how that works. And as that continues, is it's going to turn into, we get rid of work from home and do more offshoring? Are we still going to work on employing, U.S. citizens inside or U.S. based employees? Are we going to continue with that? I think with the Trump administration now putting on the $100,000 cap to the visas for foreign workers coming in, that hurts foreign workers. Does it help U.S. based flee? So I think that'll be interesting to see what we start doing, that if talent becomes too expensive, what happens. And to me, in office, it's all about what's going to happen in the labor market and figure out what's going to happen. So those are the things I'm watching, is labor market. And if we have a great labor market come back and it's an employer demanded market, we're going to see office come back.
All right. And last thing, if anyone from our audience wants to find you, want to buy a medical office building or anything in San Antonio nationwide, and they want to connect with you, how do they find you?
I think the easiest thing is social media. So it's just at Will Curtis CCIM on just about everything. Just my first name, last name with the CCIM, and you'll find me through social media. I'm on just about all of them, and we will respond pretty quickly. And of course, like any real estate professional, just put Will Curtis Commercial Real Estate San Antonio. My name better pop up, or we're going to talk to our marketing team on that one as well. So absolutely. And then if they're looking for the podcast side, everything there is just Vets NRE. So Vets INRE for the podcast side. If you're a veteran looking to transition, or you want to be a guest on our show and talk about your transition, by all means, you can find us there.
Thank you so much. Well, thank you so much. Will, I appreciate it. I really enjoyed it, and hope to see you sometime soon again on the show.
Yeah, I appreciate the invite and your time. Appreciate it. Thanks so much. That's all.
You've been listening to the Value Builder podcast. For more strategies, stories, and episodes, head to valuebuilder.co or subscribe on your favorite app. Always make it better than you found it, and keep adding value. See you in the next one.